Hey everybody, it's Pete. Good morning and welcome to a new episode of Stocks for Breakfast. I'm so happy you joined me here today. If you find these videos helpful, it would mean the world to me if you click down and subscribe to the YouTube channel so you get updates and you get my best stock picks. Today we're going to talk about something that comes out of the boot camp, and it's a common question for newer traders who don't quite have the structure yet or aren't acclimated yet enough to the community, which is how do I get prepared for the day? And more specifically, can you give me your best ideas for the day? How do you determine which of those stocks that you're really going to lean on into the day? And then how does that translate into earning consistent profitability? Well, I want to tell you, trade, and I keep harping on this every day, trading is a lot easier and simpler than a lot of people make it. And it's because you're running your business by chasing price instead of looking for a specific price and then managing and allocating buying power based on what's happening versus what you hope to see. And we see this a few times in some of the call outs that we get in the game plan, again, for newer traders, where they're looking at ideas that really haven't done anything in that particular stock for months. And even just say weeks, it doesn't even have to be months. Let's just say, for argument's sake, the stock really hasn't moved in a couple of weeks. Well, just to start out with the right mindset here, we make money with active stocks. We make consistent money when stocks are active. And I guess really the best way to word it is, and it's a way that we've been doing it recently in the boot camp, where we keep saying active. The stocks need to be active because those are the ones that have the greatest consistency with volatility, meaning that they move and move enough to for you to earn money and really move enough to warrant allocating your capital to. But also something that's really important is that they have consistent smart money liquidity. So in other words, the smart money is in those stocks day in, day after day after day. Like if I said Apple or Microsoft or Amazon or Tesla, like you know that the smart money's in those stocks day after day after day. It's our job to find a group of stocks like that that are what we might call in play, but really it's trading the market leaders. That's truly the way to word it. Going all the way back to Jesse Livermore, up to everybody who's anybody really. Sure, you can find diamonds in the rough once in a while. You can definitely find a chart of a stock that went from $2 to $10 in 5 days. But gosh, that's really hard to have confidence every single week, every single month to say, if there's money out there today, I'm going to get it. That's how I feel, and that's how members of the community feel, because we actually are only looking at stocks in play. We're only looking at stocks that have potential, only looking at stocks that have sufficient liquidity and volatility so that we can make money. But today we're going to actually take it a step further, which, by the way, if you're not in the boot camp, click down and make the investment. Absolutely get in there for September. You'll love every minute of it. It's worth every penny. We're going to talk about today how to anticipate what's going to happen the next day. Think about what I just said. Think about how much easier your trading would be if you went into the day and even into the week. But let's just start out with a day-by-day analysis, saying, I know exactly what I expect this stock to do today. Exactly. Now, most day traders specifically tend to wait to see what happens when the market opens. Or even worse, they jump in super quick because they have fear of missing out, and one trade like that moves against them can wipe them out for the whole day. I've seen it. I did it years ago. I'm like, well, yesterday this stock just took off and I missed it, so I'm going to get in as soon as the bell rings today. One trade that doesn't work out like that could have you shut off for the entire day, especially if you're a prop trader. We're going to stay away from all that. Today what we're going to do is we're going to look at 4 very distinct candlestick charts and the setups that happen on the daily chart, which will tell you exactly how you should plan for that stock the next day, right down to the point of what kind of open you expect in the market, and then how you plan to enter that after the market opens. So this is a little bit more of a day trading video. However, it's also a video that you could lean on if you're looking to initiate new swing trades and start new swing trades, or even get to the point where you might be exiting a swing trade. So we're going to take a look at this, and what I think will be the biggest revelation that will come out of this video is how many trade ideas that you're taking that make no sense, just no reason to be in them at all, or maybe you're entering them too soon or too late. So think about those three things. Shouldn't be in it in the first place, entering too late or entering too soon. Today we're going to fix that. Today we're going to give you the exact chart patterns that give you the start, the foundation of really starting to understand how to read the tape. And this is where trading gets really exciting because it puts you in control. That's really the big thing. So we're going to start out with the first stock, MDT. So you can see here on the weekly chart, we actually just finally popped through this resistance level, which is exciting, right? So now that's just one part of the equation. But what I want to really focus on is this, the actual daily candlestick and its relationship between the open and the close and its relationship compared to yesterday's price action. So just 2 days worth of price action and what that means for how I'm going to trade the stock tomorrow, meaning coming into today, because I'm doing this first thing in the morning, and what type of allocation of buying power I'm going to use in this particular stock. So we're just going to focus right here on the daily candlestick. So the first thing I want to point out is trading stocks that are at or near, closing near their highs for a bullish scenario is a stock that you can anticipate will open higher. And as long as it's trading above the open price, which I'll just show you what that means here so you could have a super visualization. This was the opening price yesterday in Medtronics. So the image that I want you to have in your head is that because this stock closed near the highs and because it was a larger green candle, let's think about what that means in the simplistic terms. That means over 6.5 hours, buyers stepped in and stayed there the entire day long enough to close the stock on the highs. So their opinion of this stock, whoever that smart money was that feels that this stock is a good deal right now and pushed it through this resistance and held it to the highs, opened it up above the previous day's high and held it above the opening price the whole day. But the most important thing I want to get across here is the fact that it closed near the highs. This stock is in play. It had a tension yesterday. It cleared levels. So what is the trade today? We're looking for this stock to open flat or slightly higher tomorrow. And as long as the stock is above the opening price, then we can be aggressive with our entries. So that's kind of a simple one, right? A strong stock that broke out, close on the highs, but we're just taking it a level deeper. So here's the thing I want to get across though. If the stock opens higher tomorrow, opens flat and starts trading lower, you can still enter that trade. However, the circumstances have changed. So you see how we just like that, we just shifted. It's not just get long and buy low. What if it opens flat, meaning opens at basically the same price and pushes lower? Well, now it's not doing what we wanted it to do. So think about that. Just before the market even opens, you know, I want to see this and how I'm going to react. But what if it doesn't? If it doesn't do what we want it to do, let's say for argument's sake, the stock opens up down here tomorrow. Say this is the opening today, meaning today's price action, the day after this candle. Let's say that it opens up below, opens here, and then instead of immediately pushing higher, it opens flat and immediately pushes lower. Well, here's how you manage that trade in two different scenarios. First, you know you definitely want to be a buyer, but it's not opening perfectly. So if it opens flat and pushes lower, that changes the scenario and that changes the share allocation. So let's just use round numbers. Let's say you want 1,000 shares of the stock, just to keep the math simple. If it opens here and pushes lower, but continues to trade lower, but you still want to be a buyer, you wait for your entry signal, and we're not going to get into entry signals today, and you get half of your intended position. Only half. Now your risk at this point is going to be today's low, if it's a new trade. Only if the stock opens here, pushes lower, you get half. Only if the stock trades back above the open, do you initiate more shares. So you see how we just shifted. I definitely want to be a buyer. The stock opens great. If it opens and does exactly what I want it to do, which is a push above the opening price, I can be aggressive with how early I get into the trade, and I can be aggressive with share size. If the stock opens here and pushes lower off the opening price, now you change your mindset immediately about how you want to buy this stock and how you want to allocate your shares. You're not going to go in as aggressively with your initial share size because the stock's not doing what you want to see it do immediately. So two different trade scenarios just off of the daily candlestick. The next one we're going to take a look at is a strong stock also, but a very different candlestick. So you can see here Lennar actually just recently traded into all-time highs. So we'll get an idea how strong the stock is. Ooh, look at it over here, right? So you can see how strong it is. But on the daily chart, you can see there's some profit taking. I'm going to zoom out this a little bit more. So what happens here now? The stock is what we call well offered and pushing lower. The setup for this stock right now is one of two scenarios. I'm literally expecting the stock to open lower, at the very least at the previous day's low. So I'm going into the day saying I'm looking for a spot to buy at the previous day's low. That's my first level. If we open flat and find support there and we get an entry signal, that's a super entry signal. So I'm actually looking for it to open flat or even a little bit lower. A more aggressive trade, believe it or not, and again, the filter of the trade is the fact that it's strong since March and just reached all-time highs. If the stock opens flat and pushes lower, I'm going to actually get a little bit more aggressive with my entry, because this is what I call the stock is now saturating this recent profit taking. Rookie traders or inexperienced traders are going to be looking to sell the stock short because right now it's going down, ignoring all of this price action. But I want to tell you flat out, this is more important than what's going on right now. This is what's more important. The story is still good here. But the fact that we've closed on the lows and done it consecutive days, I am actually looking for this to push lower, find support, and then eventually get back above yesterday's price. So you have actually three different entries now. You have yesterday's low as support. You have a further push lower. So now you have a print and a push lower. If and when that stock finds support and reverses, the second entry would be if it gets back above the opening price or if it gets back above yesterday's close. Now, ironically, I didn't do this intentionally, but I'm going to show you anyway. If this is exactly the opposite of what we're looking to see happen, because you can see the stock went up, closed on the highs, pushed a little bit higher, and then reversed. So we're actually looking for the same thing to have happen here, push a little bit lower, reverse, and then start a new swing trade to the upside, at the very least, a new day trade. So the point I'm getting across here is the filter is the longer term bullish price action. I get excited, and I've been waiting for this to happen in so many stocks. It hasn't. We've just been floating higher, where it's closing at or near the highs. We're not getting any pullbacks that we could sink our teeth into. This is one of those situations where there's three different entries at the previous day's low, a push lower for the first entry, and then adding to it either when it gets back above the opening price or back above yesterday's close, which is also the low in this situation. So again, we're mapping out how we plan to trade the stock before the market even opens. So we're working those orders because it's still pushing lower. But what if this strong stock opens higher and starts pushing higher immediately? Then you can get a little bit more aggressive with your thought process, but not your entry. Because the stock has been selling down a little bit for the last 3 days and has now not exhausted itself by pushing lower today, what I'd be looking to do is I'd be a little more conservative because of this 4-day pullback. So believe it or not, I'm a little more conservative if it starts to trade higher, and I'm waiting for it to, what we call, break out of the opening range. So we're mapping all of this out before the market even opens. And by the way, if you're not this detailed, if you need this kind of structure, this is what tape reading is. This is what we do in the boot camp every day. And these are the questions that I get in the boot camp every day, so I know what I need to continue teaching. So this is a pretty simple one as well. It's a strong stock that's pulled back. But again, the most important part here, and I want to get across, the previous stock closed on the high, this one closed on the low. That's what we're looking for, because that shows activity, especially. And when I say closed on the high, closed on the low, I'm more specifically looking at green and red candles. I'm not talking about the next type of candle that I want to talk about, which is in the market, believe it or not, which is a melted candle. This is massive indecision, and you can see here the opening price. The SPY ETF pretty much traded at or near the opening price and kept getting drawn right back to it, right? So a melted candle is massive indecision, and that's very hard to plan for the next day because really nobody won the battle the previous day. The stock is absolutely what we call well bid, higher highs and higher lows, and closed higher, but you can clearly see because it opened and closed here in basically the same spot, there was no clarity to who was in charge. So what I'm getting across here now is when you start to trade these kinds of candles and feel like you have confidence in trading those stocks, it's not really a stock that is telling you that much. However, I'm going to take this now a step further. It is telling you after this, 1, 2, 3, 4 days of well bid, yesterday, 2 days ago closing on the highs, and yesterday a melted candle. This is typically A melted candle is typically a reversal of momentum, calling it to the downside. So you have conviction to the upside where we closed on the highs 1, 2, 3, 4 days in a row. Then you get a melted candle after that momentum, and that typically leads to a reversal. So in the sense that it doesn't help you call the open, the same way that we looked at the other stocks, it does tell you the picture wasn't clear. Indecision came in after 4 days of closing on the high and being well bid for 4 days in a row. So now we're looking for this to reverse. So remember what I said before about you could use this for swing trades? This is a scenario where if you were swing trading, you'd be moving up your trailing stop and protecting some of those profits in case this is the reversal. Now, the last one we want to talk about is actually a pretty unique scenario, which is ROKU, and it's actually lining up perfectly for this explanation. And this candlestick here is not well bid, it's not well offered, and it's a melted candle. So it's none of the things we just talked about, right? So what we want to talk about here is the fact that it's a pause after this giant move 2 days ago, where this is completely inside the previous day's price action, and it's at what you can see here, a major resistance level. So we have a potential breakout from this candlestick to this one, and a potential breakout here from a much bigger picture. And you can see the stock is kind of opening flat. So this stock, ROKU, will be in our list today. And today is August 28, 2020, if you want to take a look and see how it unfolds. So what's the scenario here? The scenario here is we're not doing anything if it trades lower. If it starts to trade above yesterday's open, you can start to build a little bit of position, but that would be aggressive. I wouldn't be doing anything except having an alert set, which you can see I actually do here, just prior to this breakout at 167.50, and then get aggressive through that. But what I want to get across here is this last trade that we're talking about in ROKU. There's really nothing going on because it just completely paused. But just prior to that, there was a giant, what we call energy candlestick that stalled right at that resistance. Now, what's interesting is that's where sellers did something significant last time. And then yesterday, it paused again, but it didn't sell off. The sellers didn't step back in and drive the stock down. So now we're sitting inside the previous day. We're sitting just shy of massive significant reference points. The only thing to look to do today is nothing, nothing at all until that alert triggers at 167.50. And if it clears that level, who knows, we might be able to get a really nice trade like we had in Netflix 2 days ago, which just absolutely exploded. Little bit different scenario, but my point is helping you go into the day setting up your trades. You're not going to get involved in ROKU until it hits the right price. So in this instance, it's not well bid, it's not well offered. It is kind of an indecision candlestick, but it's also what we call an inside candlestick. So we just set up 4 different scenarios before the market even opened and how we plan to trade them. That's pretty powerful stuff, and that's where trading gets fun again because that puts you in charge. If you have any questions, leave me a comment below, and I'd absolutely love to see you in the boot camp. Have a great day.